I'm coming from a very lower middle class family where my mom is a tailor and my father is a clerk. And this is when I started getting into a fully automated trading part. So the biggest problem was I was not able to stick to any particular trading strategy because one day I was at a very low point. I was about to quit trading. Even the last 1 year income, if you see my own verified P&L, that has almost crossed 1 crore of overall income. Hey, hi, this is Kirubakaran Rajendran, and I'm from Chennai. I'm a full time Algo trader, and I'm here to share my overall trading experience with you guys, which includes multiple mistakes. Also, know what are the things that I've learned over the period, and specifically three major factors which I've learned over the years that completely transformed my trading career. So, before I go ahead and explain my overall journey, I just wanted to explain what is my background first. See, I'm coming from a very lower middle class family where my mom is a tailor and my father is a clerk, and giving a proper education itself was really difficult for me, but somehow I was able to clear the graduation, and my parents biggest expectation was to clear a degree and get a job. This is what their biggest expectation was, and I was able to get that by getting placed in Infosys through campus placements. But what happened is that is the same time where I started trading also, when Mukesh Ambani became the richest person in the world. And this happened during the 2007 end, when Mukesh Ambani surpassed Warren Buffett and Bill Gates and became the richest person in the world. And this news was so popular in India back then because everybody was talking about this specific news. And Mukesh Ambani became the richest person in the world mainly because the overall market capitalization of the whole Reliance group was making all-time high, due to which he was the richest person. Even Anil Ambani back then was also richest person. This created a huge news factors, and this brought in a lot many traders into the market, because not only Indian stock market was going up, across the world all other markets was going up big time. So I could literally see many companies moving from 5 rupees to 500 rupees in short span of time. And this news pulled me into the stock market. So what happened was, it takes almost 30 minutes of time for my home to reach the college, and this 30 minutes is a bus travel from my place to college. So what I did was, one day I just directly went and bought a Economic Times newspaper, and I just wanted to read what is happening there. And 90% of the news I did not understand anything, because I was totally new to the stock market. And whatever things that I did not know or I did not understand, I went back my home, and then whatever things I have noted down, I started learning by myself. So during those period, you do not have any specific trading course, workshops, anything. Not even YouTube was famous back then. So all you have to do is you have to learn it by yourself, and that is exactly what I did. So slowly, things started falling in place, and over the years, I started trading with whatever the money that I had. So back then, I was having only 5,000 rupees of overall capital, which was a scholarship money that I got from my college. So during the final year of my college, I started getting into the market, started trading by myself. So what happened was, every trader will have a beginner's luck phase. So what it means is, no matter what you do, you always end up in a profitable streak during your initial phase. People get confused with skills and lucks because of this. Because during your initial phase, specifically when I started trading in 2007, market was going up every single day. So all I have to do was, I just have to buy a call option and wait for the market to move up, and then your capital gets doubled. So this is what I did during my initial journey, and it started giving good returns also. What happened was, one of my friend, a close friend, his name is Aravind. So what he said is, he came to me and he said, Macha, I have 50,000 rupees of capital. So this is my semester fees, and I have enough time to pay the semester fees. So why don't you trade for me, so that we can easily double the capital, as I could literally see that you are making good returns. So why don't we trade and make higher returns, so that I can buy a laptop, and also I can pay semester fees. Then I said, yeah, it's fine, let's do it. Then we started trading with that capital of 50,000 rupees. I told him, no, making 50,000 to 1 lakh is much easier, because market keeps going up. So all we have to do is buy a call option and wait for the market to move up. And that is exactly what we did during our initial days. And the thing is, this was the period between 2007 December to Jan 2008. So the moment we started putting our capital of 50,000, market started going down. This is exactly after the launch of Reliance Power IPO, which was in the mid of Jan 2008. So that was the start of biggest bear market that India has ever witnessed. But back then we did not know that that was the start of bear market, because we used to buy call option and market used to move up, and since Jan 2008 market starts going down, going down drastically. So whatever the money that we have invested in the markets, that 50,000, that was totally gone in less than a week's time, because market crashed and all our options which we bought in the call options started going to zero. So what happened was, my friend who was given money, trusting me, he lost the trust and I lost the money. So losing money is definitely painful, but losing your friend's money is even more painful. So I learned the hard lesson there. So it not only the money is lost, you're totally losing the whole relationship and the complete friendship itself. So this left a huge scar in me, and that was the hardcore lesson that I learned, which is never trade for anybody else. Even if it is your close friend, even if it is your brother, do not trade for other people, because losing other people money is a very big headache. So slowly what I did was, over the years I thought, okay, whatever things that I have earned during the initial phase, it's all just beginner's luck. It is what you call it as Dunning-Kruger effect, where we tend to think that whatever the money that we have earned is completely through skill sets, but it is definitely through luck during our initial phase. So I started putting a lot of efforts in learning about the markets, where I not only learned technical analysis, I started learning about fundamental analysis. Because what they said is, fundamental analysis will help you to figure out what are the stocks that you can buy, but technical analysis will tell you when to buy those stocks. So by combining both these things, I started experimenting in buying a stock which is fundamentally good, and also buying a stock when it starts giving a breakout. So this is how I started my initial actual trading journey, by learning overall fundamental analysis and technical analysis part. So now whatever things that I've started learning, I implemented it directly. See, currently the biggest issue that I'm seeing with respect to other traders is, they keep spending so much of time in learning about the markets. So they do not want to get started with the markets before they complete the learning process. But what I did back then was, since the overall resources was very minimal to learn about the markets, whatever things that I learned, immediately started implementing it. Since my overall capital is very minimal during those days, whatever the loss that I've if there is any trade which I've taken and if it ended up in a loss, I sit and work on it, why that specific loss has happened. So over the years, what happens is, it is just like an army person reading about a book related to battlefield. No matter what kind of books that you read, no matter what kind of interviews that you watch about a battlefield, the moment the army person gets into the battlefield, only then the real learning starts. So that is exactly what happens with trading also, because no matter what kind of effort that you put in, as long as your money is not involved, definitely you can't learn the overall emotional aspects with respect to trading. So over the years, I shifted completely through this technical analysis and fundamental analysis and started learning everything. But still I had this restless feel, because you have to watch the markets from morning till evening, and I was also started working with Infosys. Managing a job and managing trading was really, really difficult. So during this phase, what happens is, whenever you buy a specific option, I'll give you an example. Being a discretionary trader, when you're a manual trader, say suppose if you have bought a put option on Friday evening, expecting the market to go down on Monday morning, your complete thought process will be completely towards market only. You want the market to go down on Monday. Because of that, you always wanted some bad news to happen in the markets. It could be some war news, or it could be some terrorist attack. Your mind shift is totally towards a negative outcome, because you want some bad news to come into the news so that the market could gap down. And not only that, you start thinking about the things which is not in your control. Because if you have bought a put option on Friday evening, only when the Monday morning market opens, you have to exit it. But until then, what we do is, we keep checking what happens in US markets, and then the next day we keep checking what happens in Japanese markets, and again we go and check what happens in SGX Nifty. Until our market opens, we keep jumping from one place to other place and keep thinking about our position which is open. What I learned was, everybody goes through this phase mainly because not of the call option or put option which you are buying. It is not with no any kind of analysis that you do. It is mainly with the quantity that you are buying. So when you become restless, it is mainly due to the quantity or the capital that you are trading, which you can't afford to lose. And the biggest turning point happened when I was working with Infosys, where I read a book called How I Made $2 Million by Nicholas Darvas. So this book is about a person called Nicholas Darvas, who is actually a dancer who travels around the world, and does a stage performance. This guy made $1 million in 1960s itself. And I was so curious when I read this book because this guy clearly shown that even if you do not know anything about the market, still you can make millions. So what does this guy did differently than rest of the people? So for that you have to I'll take you to a separate example, which is like everybody loves Virat Kohli and everybody loves Dhoni. So there are set of people who likes Virat Kohli based on his aggression in the field. So it is so delightful to watch Virat Kohli being on the field. And specifically, people like Dhoni as well, not because of the aggression. It is totally opposite of Virat Kohli, where he's totally calm. He doesn't get excited, and he's no matter what kind of pressure that he is going through, he'll never show that in face. And when you check any of the interviews of Dhoni, what he says is he never focuses on the outcome. He never focuses on the results. He always focuses on the process. This is exactly what Nicholas Darvas has written about in that book, How I Made $2 Million, where he said that whatever the money that he has made is mainly because of the process that he was following. And the process, what he was following is very, very simple. He tend to buy a stock when it makes a 52-week high or when it makes an all-time high. And then he'll exit from that stock when it breaks last 22 days low. So basically, he's buying a stock when a stock keeps going up. But it is totally opposite of what I've learned over the years. So people used to say you buy low and sell higher, whereas this guy Nicholas Davos was buying high and selling even more higher, which you call it as momentum rules. So these things, once I learned, I started getting conviction towards data-based approach, data-driven analysis, where if you are going to make a trade, make sure that is back-tested. Make sure that you are able to test it and figure it out whether that particular strategy which you are going to implement is going to be profitable or not. So this took me to the data-driven approach, where if from then onwards, what happens is if someone comes to a TV or in any channel and talks about, okay, you have to buy a stock because it has opened gap up, where there is a huge bullish news and the stock can continue to move up. So this is what an expert will say. But now my thought process has changed. Now what I would do is I'll go back and download all the historical data of any of the stocks, and I'll manually backtest it and check what happens. So what happens is I'll just find out what are the list of stocks that has gapped up more than maybe 2% or 3%, and what happened to that stock by the end of the day. So you will have a list of stocks which has gapped up, and by the end of the day, whether it is closed much below than the open price or closed much higher than the open price. So this gave me a clear-cut results which statistically proves that whenever a stock opens gaps up, there is a high probability that it can continue to go down. Similarly, whenever a stock opens gaps down, it can tend to move up. So if I started believing on experts and going by whatever things that they have said, I would have definitely lost money. In 1 or 2 trades, you could make money, but statistically, when I go and test it, it clearly shows that we have to do the opposite of what the expert says. So this shifted me to the rule-based trading approach, so that I have the day job, now I have a trading strategy. All I have to do is I just have to automate it. Because now day by day when I was working with Infosys, it was really difficult to managing your job and trading. So the only solution was moving to algo trading. And to move to algo trading, the main rule is you need to have precise rules. Only when you have rules, you can code it and you can automate it. And this is when I started getting into a fully automated trading part. So now the restless feel has gone, but now the next problem came in, which is analysis paralysis. So what happens is once I started learning that all this data analysis will really help me out, I started spending so much of time with respect to backtesting. So the overall time that I spend with family and kids has gone down considerably. Even if there are any functions which needs to be attended, I used to say that I have a backtesting which needs to be completed. So I used to spend almost 8 hours, 9 hours a day. Even after completing my work, coming back home, I used to spend so much of time in doing all this analysis. So now I have automated it and I'm running a strategy, but still there will be days where I make profits and there will be days I make losses. So the biggest problem was I was not able to stick to any particular trading strategy, because if there are any 2 or 3 consecutive losses happens, I'll go and try to tweak the strategy, or I'll jump from one strategy to the other strategy if it is not making profits. So this strategy hopping will always occur to any kind of people who started getting into this rule-based trading. So the same issue was happening for me also. So now I'm in a journey, I'm in this place where I started automated trading, but I'm not able to stick to it mainly because of back-to-back losses. So what is the solution? I know earlier I did not spend time, but now I'm spending so much of time in trying to learn about the markets, doing all the back tests, but still it was not giving the expected results. So one day I was at a very low point. I was about to quit trading. I thought, okay, whatever the efforts that I'm putting in is not giving me the desired results. So I decided that let me quit the job. So that day I clearly remember what I did. I took my car out. I was just parked the car next to my apartment near a park, and it was raining heavily that day. All I had was I just took a wine with me and went inside and just sat in the car. And it was raining heavily. I just drank the complete wine and I played some sad Tamil song, and I cried for at least 20 to 30 minutes that day. I wanted to vent out all the frustrations which I had in my mind, because trading is a lonely profession. Only you know what are the struggles that you're going through, and obviously the families or your friends might not be able to get what you're going through. So once I'm done, then I came back home. Then I just told that I'm going to quit trading to my wife. But she said that, okay, you can quit trading, but you just try just only one more last try. Let's try with whatever jewels that we have, we pledge it. We'll try to trade with that specific capital, and then we'll see the result. And the same thing, whatever the money that I lost, with the friend which I told you earlier, we eventually patched up and we became friends. We did not break up. But the thing is, those friends were still there to support me, even though they do not know anything about the markets. They know, okay, this guy is passionate about something, and this guy is onto something, who's spending so much of time. So they were also supportive. But over the years, what happened was, I slowly stopped trading, but now I wanted to resume it as a kind of a restart. Now I do not want to do whatever the mistakes that I did earlier. Then I read about a person called Tony Saliba, where this guy is a famous trader interviewed by Jack Swagger in a book called Market Wizards. So this guy in his book specifically mentioned about his trading journey, where he was also about to quit his trading career at one point of time, because his analysis was right. Whatever the analysis, based on his analysis, other people were making money, but he was not able to make money. Then he figured out that, see, with respect to trading, I do not want it to become success overnight, or I do not want it to earn money overnight. I just wanted to be successful over a period of time, no matter what, how many number of weeks or years it takes. He's ready to accept that. So what he thought was, instead of trading with all his capital, he started trading with only one lot. So now what happened is, he has millions of money initially started with, lost all his money. He was just left with a certain portion of his capital. Now instead of putting all his the rest of the capital, he wanted to trade with only one lot for the next 1 year, because he wanted to check whether he is a disciplined trader or not, whether he is able to follow the process or not. So that is exactly what he did, and for the next 1 year he did with only one lot, and he was able to see that he was able to stick to his own strategy. He did not override, he did not change the strategy. He completely whatever the rules that he had, he strictly followed it. And then that gave him a big shift in his overall trading career, and then he started deploying his rest of the capital, and eventually he became a multi-million he started earning multi-millions of dollars, and he eventually became a successful trader. And that is how he was interviewed by Jack Swagger. So this gave me a huge conviction. Okay, if I have to restart my overall trading career, it is not about the strategy, it is all about the position sizing. You should know how much is too much, because only when you can sleep peacefully with the overnight positions, then it means that you are trading with the right number of lots. So I started trading the same thing, where I wanted to trade with only one lot for the next 100 days with whatever the strategy that I had, because I wanted to see whether I'm following that specific strategy or not, whether I'm becoming a disciplined trader or not. So if you are also in the same phase where you are struggling, not able to cope up with the strategy, or not trying to become a disciplined trader, you can follow this specific rule. All you have to do is take down Excel sheet, write down the dates, whatever the dates that you are going to trade for the next 100 days, and next to the date enter score, where you have to give a score or marks for yourself, where if you have followed the strategy, give +1 mark. If you have not followed the strategy, give -2 mark. So do it for the next 100 days. So what happens is, you will know whether you are scoring or not. If you are making profits or making loss, that doesn't matter. What matters is the overall outcome, whether you are following the process or not. You just focus on that and give yourself +1 mark and give yourself -2 mark if you're not following the process. So over the 100 days, what you'll know, okay, today I followed the process, and this, whatever the entry, whatever the exit, whatever the stop loss, I followed it, give 1 mark. If there are any day where you are overriding your own rules, where closing the positions much before the actual exit happens, so whenever you are overriding your own rules, give -2 mark. So after 100 days, check what is your overall score. If it is greater than 85, then you are a disciplined trader, then this specific strategy is suitable for you. If not, you have to keep repeating the same exercise. So once I did that, I can understand that, okay, the overall position sizing matters, not only the strategy matters, and the discipline comes easily when you are trading with a minimal lot size which you can afford to lose. Then once I adapted to the process, I was able to understand the strategy, then slowly I started adding more capital. So now comes the next issue, which is being a full-time trader. See, becoming a full-time trader is the most stressful profession that anybody can do it, because when you're totally dependent on your trading income, which may come or may not come by the end of the month, but if you have to pay your school fees, if you have to pay the EMIs, rents and everything, the pressure is so much when you're dependent on your trading income. This thing I did not understand during my initial trading phase. If you have to become really a successful trader, you have to depend less on your trading income. So for that, you have to create a backup, whether at least for the next 3 years, take care of all your monthly expenses, or have a supporting wife who can go for a job at least until you get settled with your overall trading career. So being in full-time job, if you are totally dependent on your trading income, then definitely the pressure will be so immense. So whoever the successful traders that I've met, during their initial years, they were always dependent on additional source of income. It could be anything. It could be from their spouse, or it could be having an FD income or some rental income, at least until they become a consistent profitable trader. An alternate source of income is definitely essential. So one more important thing that we need to consider with respect to trading is, I need to give an example called California gold rush. So during 1800s, people in California, United States, they were digging some well, and accidentally they found some gold in that specific place. So they started digging more, and eventually they were able to extract more gold. But this specific news started spreading across the next states, next countries, and more people started coming into California with an expectation of extracting gold. And this created a massive population migration in California, where so many people were there and started digging gold. And there were certain people who are really persistent enough, were able to extract gold. But there are certain people who lost lives, who lost money, who lost because they spent so much of time and effort, but still they were not able to extract gold. This is exactly when there was a company called Levi's. So Levi's jeans, the kind of jeans that we are wearing right now. But that company started during this phase, started creating these cloths for miners who are digging gold, so that these people can withstand any kind of rough environment, and that particular cloth will not turn out. And Levi's started making money. So over the periods, what happened was, in people who were there to dig gold to make money, they were making lesser money. But people who were dependent on the other guys who were trying to dig gold by providing them the cloths, by providing them the rental equipments, tools, they started making more money. So over the period, if you take a statistical data and check the list of people who became rich by digging gold, and the list of people who became rich by providing the necessary tools, trainings to these gold miners, they became much more richer. So that is exactly what happens with respect to trading. So trading is definitely a tougher profession, and a lot many people who understood that started doing ancillary business like trainings, workshops, seminars, and other stuff. And there are very, very less number of people who are really successful in trading. They do the trading part, but lot many people who found that okay, trading is a tough job, they started the ancillary business, just like how Levi started selling those goods to the miners. So when you lot many people, when they come to trading, the first thing, if you think about what is the major reason that they quit trading, is mainly because of drawdown. So why do people quit trading? Because they are unable to handle the losses, the fear of losing money. See, coming to trading is like getting into a boxing ring. So if you go and ask any boxer what is the secret of success, they'll say that it is not the kind of punch that they are going to give to the opponent, but instead it is the punch they are ready to take from the opponent. No matter what, I know if you check any documentary of Mike Tyson or Muhammad Ali, you can clearly show that they train their neck very much, because neck is the one which is going to get knocked out by the opponent. So what they do is they keep training their neck very hard, so that the opponent will not knock them out. So over the years, these boxers, they concentrated much specifically on taking the punch. So that is what exactly that you need to do with trading. If you are really fearful about handling the losses, if you are not ready to handle the losses, there is no way that you can make money at all. You have to accept the losses. You have to go through the losses. So even if there are no 10 or 11 continuous losses, you should be there to take that 12th trade. And how is that possible? Is only through position sizing rules, where you should know how much you need to risk with each and every trade. If I'm risking just 1% of my capital in every trade, even after 10 trades, on the 11th trade, still I would be there to make a trade, because I'll be losing only 10% of my capital. But if I'm risking more, definitely within 2 or 3 trades, I'll wipe out the capital. So just like how a boxer is there to sustain the fight, at least for the first 2 rounds and 3 rounds, and then finally he comes back and gives a knockout punch and becomes a winner, right? That is exactly how a trader becomes successful. He has to go through a lot of losing phases. He has to handle multiple drawdowns. Only then he would be able to hit the all-time high. So as I said earlier, so first thing is I need to have precise rules. So that is how the Nicholas Darvas book has greatly helped me. Once I devised what are the rules that I need to follow, I totally automated it. But I thought algo trading will solve all my problems. But even though it is fully automated, rules driven, still emotions are involved, and the emotions can be controlled only through the position sizing, the kind of example which I have shown through Tony Saliba, where trading one lot for a continuous period of time greatly helped. And once that is done, then slowly you will stick to the process, you will become a disciplined trader, you will start seeing the result. It is not like overnight you become a profitable trader. There will be a losing streaks, and then you become a break-even trader, and then you become a little profitable trader, and then only you become a much higher profitable trader. And this cycle of moving from one lots, two lots through a higher lots again involves a different process. What happens was, even though now I got into a successful phase, I couldn't trade beyond certain number of lots. As long as I trade with 5 lots or 10 lots, I was making profits. But the moment I started putting a higher number of capital, I couldn't make profits at all. It's not because the strategy is changed, it's because of the overall fluctuations I'm not able to handle it. Most of the traders would have gone through this phase where they'll trade with 5 lots, they'll trade with 10 lots, whatever the 5 lakhs capital or 10 lakhs capital. They see a good result. Now they'll jump from 5 lakhs to 10 lakhs, 15 lakhs or 20 lakhs, or they'll jump from 1 lot, 2 lots to 50 lots or 100 lots, expecting to replicate the same kind of returns which they were making with a lower capital. But when I try to do the same thing, I couldn't do it. Again, after facing streaks of losses, I'll come back to the same old lower number of lots. And one day I read an article which totally transformed my perspective towards scaling up of capital. So this story is about a person called Milo. He is from Greece, where he has won multiple back-to-back Olympic championship with respect to wrestling. He was considered to be one of the best wrestler back then, and many people were so curious how could this guy was able to win multiple back-to-back championship. So one day there was an announcement made that there is going to be a match between Milo and a competitor. So now people are so curious how these two guys are going to train. So what happened was, the competitor who was trying to fight against the existing 6-time champion Milo, he wanted to train hard so that he could beat Milo. So what he did was, he went to a market and he bought a very big bull, so that he could lift that and train hard, and that's only then he can strengthen him much more than Milo, and he will be able to beat him in the competition. But what happened was, people were watching Milo and the competitor. They were so happy that okay, this guy, the competitor, is trying to lift a big bull. That definitely that makes sense, so that he could beat the existing champion. Now people are even more curious what the Milo will do, because the competitor himself is trying to lift a big bull, but this guy has to train much more harder. What Milo did was, he went to a market and he bought a small calf. So that calf, you can lift it, I can lift it, anybody could lift it. But people were curious, why should a strong man like Milo, a 6-time champion, should buy a small calf? But what Milo did was, he started carrying that calf on his shoulder every single time wherever he goes. To the market, to the ground, to the practice place, wherever he goes, every single day he used to carry that calf on his shoulder. Slowly over the years, the calf started growing, and that calf over the 3 to 4 years of period, it now grown into a big bull, and he was able to effortlessly lift that specific bull with ease. But the competitor who bought the bull on the day one, he was still not able to lift the bull because the overall weight he was not used to it. But Milo was easily able to lift it effortlessly because that calf was slowly grown into a big bull. Since he was lifting it every single day, that has become much easier for him. This is exactly what we need to do with trading. So when you're dealing with just one lot or two lots, you get used to the fluctuations of ups and downs. Say suppose if I'm trading with 10 lots, then my maximum downside would be, say suppose minus 50,000, and maximum upside would be plus 50,000. So this is the kind of fluctuation my mind is so used to it. But what happens if I suddenly shift from 1x to 10x, then my overall MTM will shift from minus 5 lakhs to plus 5 lakhs, which we cannot manage it. Because we always equate our monthly income with respect to whatever the income that you are making from trading. If it doesn't match, if it is hugely fluctuating, you will not be able to stick to it. So just like Milo, what you have to do is you have to slowly scale up the capital. Start with 3 lakhs, from 3 lakhs to 5 lakhs, 5 lakhs to 10 lakhs. So slowly when you scale up the capital, you would be able to withstand the fluctuations and you would be able to stick to the trading strategy. You will not come back to your old position size. You will slowly scale up the capital. So this greatly helped me, and that is how the overall trading journey, if I look back and see, these pointers greatly helped. And the last factor, once I started implementing it, I started getting a very good result. Even the last 1 year income, if you see, my own verified PNL, that has almost crossed 1 crore of overall income, which I can share it in this video in the link itself where you can verify it by yourself. So over the years, this is what I have understood clearly. If you compare your trading income with respect to fellow traders or other traders, you can never be happy, because there will always be one trader or the other trader who is going to make higher profits than you. But only the true fact which really bothered me is at what cost I'm making this specific profit. If I'm spending so much of time from morning till evening and then I'm making X amount of money, but if I'm not spending any time, but I just have to follow the process, when it gives you buy it, when it gives sell signal, sell it. So when I do this rules oriented approach, and even if it makes a lesser amount, I'm happy with it, because now I have enough time to spend with my family and kids, and I can spend with my friends also. So if at all, one thing that this trading has given me is mainly the freedom. So the freedom to do whatever that you wanted to do, and whatever things that you wanted to pursue, which you really love. There are multiple traders out there who have multiple different passions. So what I've seen is, over the period, many traders, they have their own interest, they have their own hobbies, they have their own passion, which they wanted to pursue, but they couldn't do it because they were tied up from morning till evening doing all this trading manually. But once you shift from manual process, once you shift from news-based trading to rule-based trading, you get your time back, and that is exactly when the overall trading becomes much more easier. So to conclude, I always thought that all successful traders have some secrets in their hand, but I can clearly say that nobody has any secret. In fact, there is no secret in trading. If there is only one holy grail in trading, it is all about how you control the risk and how you are becoming a disciplined trader with whatever the strategy that you are trying to trade with. So that is exactly what I did. That greatly helped me over my from 2007 to 2024. This is what I slowly learned, and this is whatever things that I've learned, I implemented it, and that gave me the huge result. So during my initial phase or struggling phase, I always thought that irrespective of putting so much of effort, why my train to the destination has not come. And then I realized my mistakes, and then I understood that I was waiting at the wrong platform. Once I corrected all my mistakes, eventually I moved to the right platform and my train came at the right time. So if you're in a phase where you are struggling and you wanted to quit the trading, or you are thinking that you are not able to make it trading, do not lose hope. You just have to fix all your mistakes, and eventually you can also move to the right platform, and definitely one day your train will also come. So this is what I wanted to convey with you guys. Thank you so much.